Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius Anucauskas. Today's the 13th of November, 2023. So, welcome, everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, also just before we go further, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can always reach out to us, yes, and we'll be happy to assist. So, yep, guys, let's jump into the charts. So, before I go further, I just wanted to kind of apologize because the video is basically, I'm not able to schedule for some reason the videos. TradingView is not allowing me to do so. There is some sort of a bug or something like that. I don't know, but still need to investigate that. And basically, that's why the videos will start at 7 o'clock. But at the moment, until I can start scheduling those, you won't be able to see them straight away, let's say in that, up in that section where the upcoming videos are, upcoming webinars are. So basically it will just suddenly spontaneously start, so for now that's the case. I mean, until we figure out what's the problem here. For some reason, I think it's something's wrong with our account, but yeah, when we figure this out, like what's happening, because again, at the moment I cannot schedule the webinars, so that's why at the moment just kind of know that at 7 o'clock GMT time in the morning the video should start. So it's like I said, it will just appear, show up in there in that section, or where's that? Let me just quickly go into the community and live streams. So currently you will see that, yes, my video is running there in the live section. So, yep, basically unfortunately, that's the only way you can, you can see it because, again, I cannot schedule for some reason the videos for now. But okay, well, I hope we're gonna get to the bottom of all this. So yeah, look, let's jump into the charts. So basically Nikkei 225. Look, I mean, I really love this one, and I really love it. So I'll pick up on the technical picture first. So I've drawn this rising channel pattern, not last week, but the week before that. So I had a range previously, but then that range stopped working, so I had to find something else. And for now, I found a rising channel, which seems to be working out nicely. So for now, yes, that's what I'm going to stick to, and yes, I do like that one. The Fibonacci here that I had before, it worked. I think then rebounded from that 23.6. So I think at this point we can get rid of it because the upper side got violated. So now, basically, I think that the easier option here, in order to aim for some lower levels, and this slightly maybe safer option, would be a drop below this territory right here. Let me just adjust this very quickly. So below this 32,060 zone, but at the same time, look, we could fall below the 50 and the 100-day EMAs, and then my next target would be this 200-day EMA. For the upside, a break of the upper side of the rising channel could do the trick for a few more buyers here, and we could start aiming for these higher levels right here. And then, yes, of course, first one would be this one, the 33,485, and then the 34,000 territory in itself. So, yeah, that's the situation with Nikkei in terms of Japanese data. This week we have an interesting one, maybe not on the Japanese front, but look, we do have some preliminary GDP numbers from Japan on Wednesday. What else do we have here? Just trade balance, which is going to be quite interesting to see because, again, as I've mentioned to you yesterday, last week, that the weaker Japanese yen, that's something maybe in favor of the Japanese government, because their exports are becoming a little bit more attractive on the global arena. So that's why, short-term solution to boost your exports, yeah, could be a good one. And that's why maybe the BOJ is not intervening that much yet. So, but I'll get to the Japanese yen in a bit. So like I said, Thursday we have the trade balance from Japan, and Friday nothing. So basically the main data is coming out on Wednesday and Thursday. So let's jump into China. Yes, seeing some moves to the downside. So far so good. We don't have, let's say, much data coming out from China, only apart from Wednesday, when we'll get the Chinese industrial production number, fixed asset investments, Chinese unemployment rate. So yes, retail sales as well are coming out at the same time. So Wednesday will be a little bit more exciting day for the in terms of Chinese data. Thursday, let me just double check very quickly. Not much house prices, yes, and Friday, yeah, nothing much. So yeah, basically it's Wednesday that the main focus will fall on in terms of Chinese data. But I think that this one will remain subject to what's happening in the global market, together with Nikkei. But at the moment, from the technical perspective, look, I don't like this. I really don't, because this is a bit of a mess. And but if we do continue to keep an eye on this downside line drawn from the high of the 1st of August, then yeah, we'll say that we're still leaning towards the downside. And look at it this way. I'll take a simplistic approach. If we continue to trade below this downside line, yes, my next target is the 11,883, and then the 11,742 territory, which could be a nice good target as well. So good potential area, but for now, as long as we remain below the downside line, then yes, I'll continue targeting the downside. In terms of the upside, well, in terms of the upside, I would like to see, and this is where I need to get rid of this upside line, no longer needed. In terms of the upside, I will take a very conservative approach, and I'll wait for a pop above the 50-day EMA, above that 12,230 zone, and then we will take it from there. Golden Digger, I can see you there in the chat room. Good morning. Gold, look, I'll get to gold. I will, because this is the list. If you see on the right here, these are all the instruments that I'm going to go through in this webinar. Apart from the last three. Those last three are just like sometimes occasionally to have a look, but I will go through all these instruments here all the way up until the EURUSD, and gold is right here. So at first I normally do indices, then commodities, then cryptos, and then I jump into Forex. So yeah, a little bit, be patient, but thank you very much for joining in. Look, that's the situation here with the China 50 index, ASX 200. So, okay, look, so far so good. I talked about this previously, and I said to you, like, keep your eyes on this little hurdle, the 6,954, 55 zone. This might continue to provide, if it continues to provide support, then yes, a bit of a rebound here could be possible. And yes, so for now, like I said, it's the for me, it's the question here is actually, will we go a little bit lower, and will we get will we get a drop back below this downside line? This one right here, the steeper one, drawn from the high of the 15th of September. So at the moment, I mean, the idea here is working out. The one that I talked about previously, I said to you that if we, I mean, whenever we break a trend line, then we kind of tend to revisit it from the other side. So far, this theory kind of works. Yes, for now, I mean, there is still a good chance for this one to reverse back to the upside and push higher. Long story short, I'm still cautiously bullish. For the downside, I need to see a drop. Well, actually, for the downside, I will already start looking at some lower levels if we do fall below the 6,954 territory right here. But for just for that extra confirmation, a drop back below this downside line, the steeper one, could be useful. Just bear with me on looking at the comments there. SBMS, good morning. Sorry to bother you with a beginner question, but currently I'm trading with a broker with high spread. Do you recommend any broker with low spread costs? Oh, I mean, look, There are so many brokers out there, easy markets. We are also a broker. So I believe that everybody needs to find, what is suitable for them. So it's in terms of, yes, spreads. I mean, ideally, if you can lower them down, I mean, look, you can go on easy markets. You can check our spreads, compare them, to other brokers. But yes, I mean, we do have a big offering, and I believe we are quite competitive. So just check out. I mean, I know it sounds like a little bit of advertisement right now, right, guys? I mean, but sorry for that. But yeah, look, I mean, we have been in the market for quite a while, so check us out. Look, I mean, like I said, you go on the website, check our conditions here, and just I think you'll decide for yourself what's suitable for you, what you like, what you don't like. So yeah, look, there are, like I said, there are plenty of brokers out there, and I think everybody needs to find the one that kind of you feel the most comfortable with. Yeah, I mean, like I said, it's very subjective. I cannot really say that, I cannot recommending one broker over another. It's very objective. No, it's subjective, because for some people this one works better, for some this one. So like I said, just do the research. Unfortunately, it's not like a straightforward answer. Like, you have to do your research. So look, SBMS, like I said, if don't be sorry for questions like that. These are normal questions, and I mean, if you're a beginner, then certainly sometimes you can get lost in the abundance of information. I think that's the problem nowadays. I mean, before you didn't have enough information. Now you have maybe too much information, and that's why I always try to take a simplistic approach in everything, because our lives are already complicated. So why to overcomplicate that? So just keep it easy. So right now then, jumping into the Dow, guys. Dow, yes, a fantastic move on Friday. We saw here. These are the futures. By the way, when I'm looking at indices, I'm looking at the futures. So we had a fantastic move to the upside on the Dow. Look, in general, some might say, but hey, we had some negativity from the Fed on Thursday. And yeah, we did get that negativity initially. Look, I talked about this, and I said for me to go lower, this is what I talked on Friday. For me to go lower, I need to see a drop somewhere below this 33,914 zone and below all of the EMAs, basically. Did we get that? No, we got a strong reversal to the upside, and basically we've cleared one of my levels here. I had this one previously. That was the previous highest point of last week. Then we created a new one on Friday. So now, in order to go higher, I think that the easier option here is to wait for a pop above the 34,373 territory, somewhere above this. A break of that one would confirm a forthcoming higher high, potentially attracting more buyers into the game. Now, some of you are also, all those technical chart specialists are also looking at something like this, like a broadening triangle here. So now let me just put this one in the chart. It's very subjective. I mean, very kind of something around here maybe. So this broadening triangle, look, the prevailing trend was to the upside. So before we entered this kind of formation, so in a way, according to the theory, it should be like a breakout to the upside, because again, this is just a continuation pattern, and we could see that move further north. So we're taking a little pause before a continuous push further north. Well, again, theory. Now, because I really am not a huge fan of broadening triangles, however, I do look at them. I still have to consider them because, again, the market doesn't always do the way I like it, so I have to adjust to it. So, look, but the way I'm going to adjust, I'm going to remove this broadening triangle, and I'm going to keep an eye on the 34,373 territory. If we get a nice pop above it, then yes, I will go higher. For the downside, the same story is valid. Drop below the 33,814 could open the door towards some lower levels. All this area right here is something of a neutral one for me, so that's why I'm not gonna do much stuff here. In general, this week, guys, in general this week. This is the S&P 500. So this week we have some data. We have some data from the US. Of course, everybody's going to be watching today's crude oil inventories. No, of course not. No, everybody's going to be watching the CPI numbers which are coming out on Tuesday. So, yes, today, as I already mentioned, the crude oil inventories are coming out. So if you're trading oil, congratulations. This could be something maybe for you. But Tuesday will be the more exciting one, because Tuesday in general, we do have some European data coming out, but then of course all eyes are going to fall on the CPIs that are coming out from the US. Now, look, the current forecast for the headline year-on-year CPI is for the number to go lower from 3.7 to 3.3. And in the core year-on-year CPI is forecasted to remain the same at 4.1, together with the month-on-month core month-on-month figure. The the month-on-month headline CPI is expected also to decline. So the headline numbers are expected to decline. The core numbers are expected to stay the same. Now, if everything comes out lower, and let's say the core falls and below the forecast, and let's say the headline stays as the forecast. And I think, in my opinion, but that's my opinion only, this could be positive for the market because, again, this would kind of blow the whole Fed speech about like, oh, we need to, raise rates still because the inflation is like, it's still not there, and, blah, blah, blah. Yes, it's not close enough to 2%, the target. But the rate hikes and stuff, then it kind of shatters the whole idea of, having further rate hikes, because the current level of interest rate, maybe it's enough to keep the inflation gradually going lower. So that's what I'm saying. So if the numbers come out lower, then this could be positive for the stock market. We could see weakness in the US dollar. But yeah, looking at the picture here from the technical perspective, I mean, I'm still leaning towards the upside. In general, this worked out beautifully. I talked about this on Friday as well. I said to you that if this 4,364 territory continues to provide a good support, then yes, a push higher here could be possible. We could aim for that 4,434 zone, which gets cleared. That my next target is only this downside line drawn from the high of the 27th of July. And for now, that's what I'm going to only aim for. I'm not going to aim for something higher. Yes, ideally, yes, higher levels could be met, but yeah, for now, let's keep it short and simple. Daredevil Dave, good morning. I can see you there in the chat room. And SBMS, appreciate the advice. It will help me make a better decision. Again, like I said, it's very difficult to kind of give advice like in that sense. I mean, because we're all different. We all need to kind of find our own approach, unfortunately. So even, let's say, with with all these webinars, with mine inclusive, like we were watching all these guys, running the shows, and me as well. You're watching this guy running the show and giving you this, and this idea. But that's great. Look, I mean, you don't have to listen to me 100%, honestly. Don't. Just kind of the whole point is that you're capturing a little bit of idea here, a little bit of knowledge here, something like a news flash here and there, and blah blah blah. Like, something that you maybe missed or something like that. Most of this stuff. Oh, so my microphone. Most of this stuff, and it's just that, like I said, you're trying, by watching all us, you're trying to build a picture for yourself. If you think that it's becoming way too confusing, then limit the amount of information you take in. This is very important, because again, then you might go crazy with the freaking market, honestly. Because I know by myself. I mean, from my own experience, and just like I said, you might just when you need to listen. Yeah, you listen to what's happening in the world, but then and what other people have to say. But then you just kind of slow down. Okay, look, Is this useful? Is that useful? Is this, did I hear that already? Okay, that's fine, but then, oh, this is something new. I'll pick it up, and cherry pick. S&P 500, that's the situation here. For the downside, it needs to drop below the 4,364. Smooth transition from a bit of theory back into technical analysis. Okay, look, drop below the 4,364 territory could be nice, I think, for the bears, but then we need to be very, very careful. I'm not saying that I'm going to be very bearish suddenly, no, because I have my EMAs here, the 50 and the 200, which could provide eventually some support. This level needs to go away. I don't like it anymore. Yeah, I don't like it anymore. I think I'll just recycle it. Always recycle, guys. Always do. So yeah, I mean, maybe I'm going to mark this one instead, this low of last week near the 4,354 territory. But I'm going to start looking at some lower levels already from this 4,364. NASDAQ 100, very quickly. Looking at the beautiful picture here, I mean, the Friday's explosion here, nice. We broke the downside line. I talked about this. My next target is the 15,718 zone, marked by the highest point of September, and then I'm going to take it from there. Yes, I do like the other target here, which is the highest point of July, or in other words, the current highest point of this year, which is a good, nice target right there near just above the 16,000 mark. And yeah, I mean, I'm going to aim for this first, the highest point of September, and then I'm going to go for the highest point of this year, the current highest point of this year. But that's only as long as we remain above this downside line. Look, also something that I keep on mentioning, that, whenever we break a trend line, we tend to revisit it from the other side. In general, I do like, oh, excuse me. I do like that idea, and but maybe first we could test this and then reverse back down. Let's see. The German index, DAX. So yes, as I said, we do have some European data coming out today. Let me just double check. Yes, today we do have the EU economic forecasts coming out later on. So maybe a bit of a market mover could be, but then the focus will fall on the on tomorrow's data, which is the employment change, the preliminary employment change numbers, German ZEV economic sentiment. Oh, that's going to be an interesting one. Yes, together with the EU's GDP, preliminary GDP numbers. So yeah, excuse me. In terms of other days, look, industrial production, Wednesday, Eurozone's industrial production, yep, coming out on Wednesday. And then the, what else? Oh, by the way, I forgot from the US, I forgot to mention retail sales. Ooh, that's going to be an interesting one. That's coming out on Wednesday. So Tuesday, Wednesday, and I think Thursday will be those days that are going to be quite exciting. So yeah, that's mainly what's happening. And Friday, of course, the big event for the Euro and the German DAX traders is the EU CPI numbers. So, yep, keep your eyes on that. For now, the technical picture tells me that I am a little bit more bullish than bearish. However, I need to see a stronger move above this 15,338 zone and above that 50-day EMA. You know what? We can actually just stick to the 50-day EMA. If we clear that one, then yes, I will go to the upside towards the 200-day EMA or even the 100-day EMA. So, for the downside, a drop below the 15,133 territory here is required in order to consider some lower levels. All this area right here will be something of a neutral one for me. The FTSE 100. So, I mean, honestly, I really don't like this. And this is a bit of a pain in the bottom because I talked about this idea where I said that as long as it remains kind of above the 7,400 zone, then I'm going to remain cautiously bullish. And there we go. We dropped below this hurdle. So that means that this hurdle is maybe not as exciting as I thought it could be. However, we're currently below it. So in a way, judging from my logic, from last week's logic, that if we do drop and stay below the 7,400 zone, then yes, there is a chance for this one to move a little bit more to the downside. But you know what? I think as much as I like this level, I kind of as much as I would not like, as much as I hate to let it go, I think that, yeah, I think it's going to be time. And in general, if you're looking for some higher levels, it's really difficult to find a good level here. Maybe, just maybe, we could keep an eye on Friday's high. So if we do, let's say, push back above the 7,436, then potentially, yes, this could open the door to some higher levels, potentially targeting the EMAs here, which I have on my chart. For the downside, I would like to see maybe a drop at least below today's current low on the futures here, near the 7,370 zone. So that's my short-term analysis. Look, we do have some data coming out on Thursday, if I'm not mistaken. Let me just double check very quickly. Thursday, we do have, no, when was it? Wednesday. When was it? Wednesday. Yeah, there we go. Wednesday, we do have the British CPI numbers coming out. So headline and core, together with the PPI input-output numbers. So yeah, I mean, quite a big day. Quite a big day for the British pound. Could be on Wednesday, but certainly we are watching the other news as well, depending on what you're trading. So long story short, for now, the FTSE 100, that's my game plan. Look, I mean, the fact I'm quite disappointed that this 7,400 zone is no longer playing out as I would wanted to. So that's why I'm going to stick to probably these levels, the 7,436 and the 7,370 zone, and then we will go from there. US dollar very quickly on that one before I run out of time. I still have a lot to go through, so US dollar very quickly here. So look, this 105.88 zone continues to provide good resistance. So yes, we are above the 50-day EMA, above all my EMAs. So that's a positive. However, like I said, it's going to be very data driven, and I told you that on Tuesday we do have inflation numbers coming out, so just be a little bit on the careful side there. If we do pop above the 105.88 zone, I'm leaning towards the 106.57 or maybe even higher levels. For the downside, a drop back below the 200-day EMA could do the trick for a few more sellers. Gold reached my target, a 38.2% retracement on the Fibonacci. Fantastic. I talked about this last week, and I said to you, look, if we do fall below the 1953 territory, yes, I'm going to go for lower levels. And then we did, then we didn't, then we did again. So this, basically, we can get rid of this. The most important is that the Fibonacci's are working so far. And if you're looking for some higher levels, I think a push back above the 23.6 here is required. At this point, given that we already reached my 38.2 right here, my next target will be the 50% retracement. My first target will be the 200-day EMA. And then it will be the 50% retracement on the Fibonacci. So the 200-day EMA is actually somewhere in between the 38.2 and the 50% here. So it could be a nice good target as well. So as we know, the market does like these midpoints as well, as you can see, for example, here, as like a temporary pause. So like, for example, here back on Thursday or Wednesday and Thursday, yes, we had a bit of a good hold up near the midpoint of between the 23.6 and the 38.2. So that's why this 200-day EMA is also like a very nice one, a nice good target. So that's that's going to be my downside scenario. If we do drop below the 100-day EMA and the 38.2, then yes, that's where I'm going to aim for initially, the 200-day EMA, and then the 50%. For the upside, the 23.6 is required in order to consider higher levels. I know that there's a lot of territory to miss out on, but at the moment I'm not seeing. Look, I can see that the 50-day EMA is providing good resistance. So if you are comfortable with something like this, for example, starting to aim for higher levels from around here, from around this 1942 zone. Okay, look, whatever you feel, comfortable with, but just remember that we could see a push higher. We could get a nice hold up somewhere maybe around here near the 1949-50 zone, and then a reversal back down. So just kind of do not ignore that scenario too. Let me just adjust a few lines here. I need to clear up the chart. Yes, there we go. So let me just, yeah, that's what I'm going to mark here. So that's the situation with gold. Again, I'm cautiously bearish, but I need that confirmation break. Once I get that, then I'll consider the next short-term directional move. Silver is beautiful. Finally it's doing something. So it finally fell below my upside line drawn from the low of the 22nd of June. And yes, we fell below this. And now the question is, how far can we travel, further south? Well, at the moment, yes, I'm leaning towards the downside, to be honest, as long as we remain below this upside line. If we climb back above it, maybe we could consider a move to the upside again. Oil is as well very beautiful. Why? Because again, we are still trading below the hurdle here, the 77.60 zone. This is acting as a good area of resistance so far, and I talked about this, and I said to you that if we continue to trade below that, then yes, my next target is the 73.90 zone right here, and then we'll go from there. For the upside, I need to see a break of this downside line in order to consider some higher levels. At the moment, I'm leaning towards the downside still. So my next target is the 73.90, as long as we remain below the 77.60 zone. Natural gas, beautiful rebound here. Beautiful, actually not a rebound, more of a reversal from the area of this upside line drawn from the low of the 25th of September. So what I said to you, if you remember on Friday, I said to you that if we do climb back, okay, if we do rebound, that's great. But if we do climb back above the 50-day EMA, and this is from where I'm going to start looking at some higher levels again, I'm going to target this 3.32 zone right here, marked by the inside swing low of the 30th of October. That's going to be my next target. Then I'm going to slowly target the 3.4 area and so on and so on. For the downside, I would need to see a drop back below this upside line drawn from the low of the 25th of September. And then I will aim for the other upside line here, drawn from the low of the 24th of August. So again, both of these lines are a little bit on the tentative side. So I'm still keeping an eye on the chart for them, yes, I'm still considering them. Maybe they will work out nicely. Let's wait and see. But at the moment, I'm cautiously bullish. Bitcoin. So, fantastic hold up near this 37,400 zone. So, just to remind you what that level was in the past, that it's this one. Where's that? There we go. It's this one right here. That's the inside, or actually not the low of the 1st of May of 2022. So I talked about this previously. I said to you that that's going to be my next target. If we reach it and we break it, then I'll go further north. Well, look, at the moment, what I'm going to do here is I'm going to consider something like that. So at the same time, we're also trading above the short-term upside support line drawn from the low of the 27th of October. And if we do push higher, and if we do break this break above the 37,400 zone, then yes, I will go to the upside. And for me, in order to go to the downside, a break of this upside line here is needed. So long story short, all this area right here is just for observation for me right now. If we do pop up with the 37,400 zone, then in a way, it's kind of opening that door towards that psychological 40,000 mark. So let's see if that happens. However, if looking at the other cryptos, somehow I'm not really getting that very bullish feeling. But again, let's wait and see. For now, looking at the Bitcoin Cash here, I can see that, yes, it's struggling with this 250-51 zone, but it's still holding above this upside line drawn from the low of the 17th of August. So as long as we remain above it, then yes, I will continue targeting the upside. So my next target here will be, if we do pop above the 251 zone, then yes, I'll go to the upside towards the 269.70 territory right there. For the downside, yes, a break of this upside line is required in order to go lower. JD Invest, good morning. Silver, I just talked about silver. I just talked about silver. There we go. That's the one. So again, like I said, I need to go further. So apologies for that. Silver, just you can quickly rewind the recorded session, but I already talked about silver. So sorry. Out of respect to others as well, I need to continue. But yeah, like I said, have a look at the recording after this video is done. So Ethereum, very quickly. Ethereum is beautiful. I've reached, yes, my target got reached here, 2,140, 42 zone, approximately around here. Beautiful move back down. So look, this move here happened on Thursday. I mean, if you don't remember my video, I talked about this on Thursday. Or no, sorry, was it Friday or no, Friday I mentioned this, yes, because on Thursday that happened, and the reason why it happened because we got the biggest asset manager in the world, BlackRock, coming out saying, oh, you know what? Hey, let's do also an Ethereum ETF. Yeah, Bitcoin ETF. We are in the process of maybe establishing that one, but hey, why not to do an Ethereum ETF? There we go. That's where the explosion happened, and but the funny bit is that still the Bitcoin is still everything is sitting with the SEC. I mean, it's not really approved yet. So, but something tells me that it would be difficult to say no to the world's largest asset class. Asset manager. So yeah, like it's okay, let's play the game. Let's play the game. Say no, we need to look into this, but actually eventually we'll approve that, But the funniest bit will be if they would actually propose the Ripple ETF. Oh, that would be hilarious, because of all the problems and all the ongoing cases, lawsuits going between Ripple and SEC. And then if, let's say, BlackRock comes out saying, hey, we want to do Ripple ETF, that would be like a spit in the face to SEC. But again, let's see how this this crypto telenovela is going to continue. Right. Coming back to the technical picture here on Ethereum, look, a drop below the 2020 territory here. From here, I will consider a move lower, a larger correction to the downside, because again, if I draw my favorite Fibonacci from around here to here, then we have still some room up until this area. But I really don't like it. Maybe actually it's the wrong way to draw it. Maybe this way it needs to be drawn. There we go. I think that makes a little bit more sense. So we're currently resting on that 23.6. If we do drop below it and then we drop below that 2020 zone, then yes, my next target is the 38.2. And then maybe the 50% retracement on the Fibonacci. For the upside, I need to see a pop above the current highest point of November, and then yes, we'll go from there. Ripple. So also a beautiful move to the upside, beautiful test of the 0.73, 16 and 51 territory right here. Good, my mission accomplished. My next target here is, well, I don't have one actually, because in order for me to go higher, I need to see a clearance of this highlighted zone right here. For the downside, a drop below this upside line is required in order to go lower. Let's jump into Forex, AUDUSD. So, look, last week we had the RBA, interest rate decision, and yeah, that didn't work out well for the Australian dollar. But look, I'm not going to pick up on that topic again because I already talked a lot about it last week, so you can check out some videos there. But basically, just a sec. Yeah, okay. So basically, for now, it's not looking good for Australian dollar. Look, we might get like a random boost here and there, but in general, I think a lot will now depend on the US dollar. So look, in terms of economic data, today, not much. Tomorrow, we do have the NAB business survey in Australia, but I think the focus will be mainly on Thursday's data, if I'm not mistaken. Yep, employment numbers, Australian employment numbers coming out. So look, all the way up until Thursday, we might not see much of strength in the Australian dollar. Again, let's wait and see. Of course, I'm maybe speculating too much, but for now, from the technical perspective, look, we found good resistance here. I said to you, like, I need to see a break of it in order to go higher. We didn't. We started moving lower. Then I said to you, in order for me to consider lower levels, a break of this upside line here is needed. We broke it and we moved below my 0.6393 territory, so that's great. We're currently below all my EMAs as well, so in a way, maybe as long as we remain below this, below all these EMAs and below the 0.6393, then yes, I will continue targeting the downside. My only problem is the US dollar and the way the reaction will go here, because we do have some US data stuff. So yeah, for now I would say this way. At this point, if we just purely analyze it, if I'm purely looking at it from the technical perspective, then yes, I will continue targeting the downside. SBMS, in your experience with technical analysis methods, do you find yourself trusting the most? Okay, again, I know I'm gonna, okay. I know I'm not giving you any clarity in general, and look, there is a reason why I'm trying to be as vague as possible, because something that works for me does not work for somebody else. And you can have like so many different analysts look. For example, I go from the Dow theory, I go from higher highs and lower lows perspective. I don't look at, for example, Elliott waves and like all these what they call ABC patterns, right? 1, 2, 3, 4, 5, and then ABC. It does have grounds for being like present, yes. I mean, but again, it's really subjective the way you look at those, so that's why technical, like if you look at purely RSI or MACD or something like that, then it's also not as straightforward, because you cannot say like, oh, RSI now is like above 80, I'm selling. No, it could still be there above 80 for quite a while, and it could run for a few months. And I've seen this happening where, like, honestly, the RSI was just like flat on top above 80, especially when you look at something like a weekly chart, and sometimes like on indices that used to happen and still happens. So again, you need to find what works for you, because if let's say, for example, what I'm talking about does not work for you, that means maybe you need to find something else. Maybe maybe Ichimoku clouds work for you. Maybe Bollinger Bands work for you. I know for me, for example, there's other indicators that I do like to look at myself, but the reason why I'm not putting them on this chart, let's say here, because sometimes they might overcrowd, and sometimes they might not give the real picture. So I try to keep it as simple as possible, and I'm going from my higher highs and lower lows perspective, and that's why I do like my formations as well. I do like my strong resistance, support barriers, trend lines. I do look at those, and so far, and I like my EMAs. I mean, because they do help me a lot, and of course sometimes they don't, but nothing is guaranteed. Nothing, not a single indicator is like 100%. Still, the market, if it works for you, let's say at some point, then it stops working. That means the market, adjusted to what you see, and because the whole point of the market is kind of, so would you would lose money, right? I mean, we're trying to play this game, so we're trying to kind of make something at least. But look, I would say be careful. I mean, try to find something that works for you. I mean, there are so many indicators out there, but like I said, from my perspective, I just said to you what I prefer, and I will. So far, I'm going to stick to that because it works for me, and that's why I'm sharing my experience, like what how I do it. But in addition to what I'm sharing, you can actually apply something else, like additional stuff. Like I said, you can look at different other indicators, which maybe could be, which could be useful. But yeah, for now, I don't know, like I said, how much I'm being clear here, but as BMS, But look, it's very difficult to say, oh, use this one because it works. No, it's not. Nothing works 100%. So until you figure out like your own strategy in general, I tell this to everybody. I tell this to everybody who I teach, who I kind of share my like experience with. You have to find your own strategy. Don't just blindly follow what other people say, because it's all you. Just, I don't know, like if you're following some sort of signals and it works for you, okay, that's fine. But just remember one thing, that it might stop working. So so eventually everything stops working. Eventually everything stops working. That's what, in general. That's why we always have to adjust. We always have to kind of, think of another way. So that's why, for example, sometimes my levels work, and then they stop. And that's why I'm saying, okay, I reached my point where it stops working. I need to rebalance everything, redraw everything, and, have a different approach. And I do this constantly. It's not a problem to, it's not like a defeat of you. No, it's just the market adjusted. So now, you need to adjust too. Anyway. NZDUSD, very quickly on this one. So we're resting on that 50% retracement on the Fibonacci. Fantastic move here. Now my question is, can we go further south? Well, at the moment, I'm kind of leaning still towards the downside, as long as we remain below all of my EMAs here. And this 38.2 is a good also barrier for some upside. So basically, in other words, I think I'm going to draw this way. So if we do climb back above the 50-day EMA and this 38.2, which coincide beautifully, if we do climb back above that, then yes, I'll consider a move higher, initially towards the 23.6, and then slightly above that, we do have the 100-day EMA. But if all that gets clear, then yes, beautiful move further north could be possible. At the moment, to the downside, I would need to see a drop below that 50% retracement here on the Fibonacci in order to aim for that 61.8, and then we'll go from there. As we mess and have everything knowledge, not being specific is probably better, as I can learn more. Interesting one thing. Thank you. Yeah, I mean, honestly, don't even trust me. I might be, telling you stories and like you'll blindly believe me, and then I'll be rich. No, I'm joking, of course, guys. No, of course. Look, you have to take everything with a pinch of salt. Like I said, something that works for me might not work for you. You take what I say, and you just filter everything for yourself, and then just kind of apply it on your own strategy, which you will create, which you will find, make it profitable. You will make it profitable, and life will be pretty and nice. So NZDJPY, beautiful move here to the upside. Beautiful reversal from that 23.6. That's great. So far so good. And look, if you want to see some higher levels, I think at this point, the fact that we're reversing from that 23.6, that's great. So let's put it this way: if you've managed to, let's say, if you went for that risk, and let's say you decided, you know what, I'm going to gamble here, and I'm going to go long from this 23.6. You're probably currently in profit. If you missed this reversal, I would say leave it. Leave it, because I want to see in that case, will it go further north or not. But if you did already enter long here somewhere from this, from this 23.6, then probably you have a stop loss in place, right? You have a stop loss on a break even, right? So that you wouldn't lose in case this reverses sharply to the downside. Because if it starts falling below the 23.6, I'm leaning towards the downside. CHFJPY, one of my favorite ones, and there we go. One of my favorite ones is approaching this key resistance barrier near the 168.43, which is the highest point of October. If we clear that, guys, what's going to happen? A forthcoming higher high will be confirmed. What does that mean? That means that the higher levels could be met. We could then start aiming for that psychological 170 zone, and then so on and so on. For the downside, I will take a very conservative approach and wait for a drop below the 50-day EMA in order to go lower. But this here is a battle of the two safe havens. So far, the European safe haven here is winning. But again, if BOJ starts intervening, then we could see the Asian safe haven working out here better. USDJPY, also similar story. We're also near key resistance, and yes, I mean, look, 151.72, we've reached that Perfect. I talked about this last week, and there we go. Fantastic result. Now, my next question, will we get a nice breakout? Well, we do have that 151.9495 zone right there, which is the highest point of October of 2022, or in other words, the highest point of 2022. If that gets cleared, fantastic. We could go for some higher levels, but not really like strongly aiming for the upside. We'll aim for that for those other targets, like maybe 153, 55, something like that. But again, only very carefully, because again, if BOJ suddenly says, you know what, we'll step in. And there we go. We could see Japanese yen picking up buying interest. USDCAD, something very interesting still here. So look, I talked about this last week. I said that I need this pop-up of the 1.3813 in order to go higher. For the downside, a drop below the 50-day EMA is required for me. All this area right here, just I'm observing the price action. GBPUSD. I don't like it, but I still have to do something with it. So basically, if you're looking for some higher levels, and maybe a push back above the 50-day EMA could do the trick here. So this is where my EMAs, for example, why I do like the EMAs, because I do look at levels. I do like looking at the resistance and support levels, but sometimes they stop working. And this is where I refer to EMAs. When the EMAs stop working, then I go to support and resistance levels again. Or I look at both in this case. So long story short, for now, I'm leaning towards the downside, because this formation, little formation here, we have our pole and we have our little bearish flag forming here. So in a way, there's a good chance for this one to drift further south. If we do pop back above the 50-day EMA and this 1.2288 zone, then yes, I'll consider a move higher. EURGBP, my unfavored pair. Look, so far, so good, I would say. I don't like this one. I mean, but I still look at it. This 0.8741 area is still providing good resistance. Last week, we got a nice push higher, but then we tested that 0.8754, and we got a hold up here. So, look, if we do once again push above the 0.8741 territory, then yes, I will go higher. I will go for that 0.8754, and if that gets cleared, then yes, further moves north here could be possible. In terms of the downside, a break of this upside line for me is required. Until I get that, this move lower could still be classed as a temporary correction before another possible leg of buying. But for now, my buying scenario is from around here on a break of these two levels. EURCHF, also looking at this barrier still, the 0.9653. And if we do clear it, then yes, great, more buyers here could join in. Now, in terms of the downside, a break of this upside line is required in order to go lower. So if you do clear this upside line, then yes, I will go to the downside. But again, a big territory here to fill still. But for the upside, yes, a push above the 0.9653 territory here is required for me. So, and then I'll aim for the 200-day EMA and then the 0.9694 marked by the highest point of September. And finally, EURUSD. So EURUSD is stuck. It's near my 1.0695 territory. Again, we drifted below it last week, and I said to you that my next target is the 50-day EMA. To be honest, it's a tick, because I always say that it's never the exact level, it's the area near that level. So there we go. So far, it's a good result here. Now, if you're looking for some lower levels, I think that there is a better option here right now to wait for a drop below the 50-day EMA, because again, all this, hey, maybe this is a bearish flag, but again, not a very attractive one. For the upside, I would say if we do climb and stay above the 100-day EMA, then yes, potentially more buyers here could join in. We could go higher. Could go above the 100-day EMA, and if that gets cleared, then certainly yes, more buyers here could join in. So keep your eyes on the European and the US data, and of course keep your eyes on tomorrow's US CPI numbers. That will have an effect here on US dollar. Oh, sorry, US dollar, Euro USD. But which way? Well, another way how to look at the upside scenario here is maybe, just maybe, this is just an idea, is to keep an eye on this little downside line, which we are currently testing. If we do clear and stay above it, and we then climb over the 100-day EMA, then yes, potentially this could open the door to some higher levels again. So that's why my downside scenario is from around here. Actually, I'm going to draw a level here as well, because I do like this area very much. So this 1.0660, I think from here, yeah, we have the 56 here, but I think that from the 60 zone, we already can have, we can start examining lower levels. So yes, a nice good drop below this could open the door to some lower levels, guys. And on that note, I'll have to thank you. I'll have to thank you for tuning in and watching this one till the end. I really appreciate your time, guys. Really do. Thank you very much for killing an hour of your life with me. Honestly, that means a lot. Because again, I know that everybody's time is precious and valuable, so thank you very much for tuning in and watching this one live. If you're watching this as a recorded session as well, thank you very much for watching it, or honestly, really appreciate that. So, and on that note, look, I will have to say thank you, and I'll have to say, again, thank you, yes. I'll have to say stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Tune in tomorrow. Again, once again, if you don't see it as scheduled video, as upcoming stream, then I'm sorry, because there's like an issue with TradingView with our account for some sort. We'll have to look into this. But yes, it will show up as live straight away. So tomorrow, so 7 o'clock GMT time. Tune in. Yeah. Thank you very much, and bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.